you started investing in distressed securitizations. Do you want to double click on that story in that chapter?
Sure. So after my rich uncle wound down, I was wondering, okay, what to do. And the market was completely frozen for any type of loan product. And investment banks were trying to get these securitizations of loans that they had purchased from their customers or that they had gotten hung with off. And so I discovered that one of the banks that owned the securitizations that I had just done at my rich uncle was offering to sell them to investors for 40 cents on the dollar. And so I was like, wow, that's amazing. Like something I just sold for 100 cents on the dollar is now trading for 40 cents on the dollar. What exactly is the challenge? And what I discovered was fundamentally these folks at the big banks, they were entirely driven on a methodology for pricing securities based on their credit rating. So they weren't looking at what the underlying loans in the securitizations were. They weren't looking at what are the attributes of the people that had backed those loans or who owed those loans. They weren't looking at the underlying real estate they owned. They didn't look and understand what schools they had gone to. And so I saw in a similar opportunity where I said, well, if you actually just go do the research rather than just saying this is, a AAA security that was now, a triple C security and therefore trades at a 15% yield instead of a 5% yield, you could actually instead understand what was inside those securities, who were the obligors in those loans, and re-underwrite them and figure out whether that security was mispriced or not. So that's what I started to do. I started to go in and understand first student loan asset-backed securities. And we started working with banks and hedge funds to actively go and buy these types of securities. And we got to a book of about $1 billion of pools of loans, underlying student loans that we managed. And then from there, we started looking and people started saying, could you do this for mortgages? And so we said, yeah, I can do this for mortgages. I can apply a similar, thought process. Just work harder, work smarter, and understand what's going on with the underlying collateral in these mortgage pools. And we started to do workouts of mortgage pools. And ultimately, I created a business that got to about $6.5 billion across all the different vehicles that we were managing. And it was an incredible business. And, that was the business I was doing before, Better came along.